Let's look at the currency and commodity market as it stands now. How the oil price has performed, how the precious metal has performed. Let's take July as the base. How the industrial metals, agricultural commodities, soft commodities, dollar index is equally important. Currencies and commodities are interconnected. How the advanced economies currencies have performed, how the emerging economies currencies have performed. If you look at the oil price, WTI, that is US crude, $73.95 per barrel. That is 53% up year to date. Brent, 75.41. That is 48% up. Natural gas, 3.914, short of $4 MMBTU, British thermal units. 44% up year to date. The Organization of Petroleum Exporting Countries, that is OPEC, and its partners rescued the oil industry by slashing production when the coronavirus crushed the world fuel consumption last year. Now, as vaccines are rolled out and the drivers take to the road again, the coalition led by Saudi Arabia and Russia is carefully resuming shipments. Despite the number of cases remain at a high level, the oil market no longer appears to be viewing the issues of the Delta variant with quite the same alarm, and it was at the beginning of the last week. While temperature soars in parts of the US, an overall short-term outlook for milder, wealthier conditions help push natural gas futures down as much as 5% on Friday. Gas for September delivery closed 3.6% lower at $3.914 per million British thermal units on the New York Mercantile Exchange on Friday after dipping 3.885 earlier in the session. What about the precious metals? Gold, 1814. So year to date, if you look at it, there's a contraction of 4%. Silver, 25.49, has a contraction of 3%. Gold prices are set to close the week on, after investors cheered the US Federal Reserve's Chairman Jeremy Powell's comments suggesting the central bank was unlikely to hike the rates anytime soon. The yellow metal rose to highest level in over 2 weeks after the Fed dovish statement. With the continuous spread of COVID-19 and a Delta variant threat, Delta variant is coming still. Some part of the world it is already there. The threat to the nascent economic recovery globally, the other central banks are expected to have similarly hold their horses on increasing interest rate. So it's still, that's the concern. What about copper, precious industrial metals? If you look at it, $9,728 per ton. That was last week. It's up by more than 25% year to date. Copper is up 25%. Aluminium 30%. That is $2,590 per ton. Nickel 17.6%. $19,500. So last week copper fell the most in almost in the 2 weeks as the dollar rose while the concerns simmered over coronavirus variant and China's regulatory clampdown. Aluminium prices rose highest since April before settling down to 0.1%. Supply snags at China and Canada also, and evidence of booming US demand gave boost to aluminium prices. Nickel declined $283, $19,500. Nickel price will remain on a gradual uptrend in the long term as the global market remains at deficit. What about the agriculture commodities like corn, wheat, soybean? They are all measured by bushel. Corn at 5.45 bushel and is up by more than 25% year to date. Wheat is around 7.3% bushel and is surged by more than 11.7%. Soybean is at 14.14 bushel and surged by more than 12.4%. Droughts toll on US spring wheat yield potential pushed the wheat higher last Thursday. The same drought conditions could eat into the soybean and corn yields, push them as high as well. When it comes to soft commodities like cocoa, coffee, sugar, there's a change again. It is cocoa 2366 per ton, all are denominated in dollars, 5.5%. Hedge fund managers are all cutting the New York cocoa bets last week. Coffee was at 179.95%, 95% per dollars, $179.95 I should say, per pound. That is coffee pound, and has a surge more than 34%. Coffee fell most in more than a dozen years of late. But sugar was at 17.91 and surged by 27% year to date. So raw sugar boosted 7-week high. Now when it comes to coffee, 34%, you know the reason? Surge because severe weather will further damage crops in Brazil. That's the concern. When it comes to currency market, dollar index is 92.174 by end of last week, surged by nearly 200%. The greenback, as we call it, as Gauge portrayed a 3-day downward trend following the Fed's rejection to discuss tapering, despite staying optimistic on economic transition. Recently weighing on this quote, the news concerning US President Joe Biden infrastructure spending bill movement in the Senate. So what about the emerging markets? Euro is at 1.18. It has weakened by 3% year to date. Euro monetary easing and COVID weakening the currency. The pound is at 1.390 again. Yen is at 109.72. The Swiss franc is at 0.9 against the US dollar by end of the week. It has strengthened by 2%. Now, yen is weakened by 6%. Swiss franc is strengthened by 2%. The pound, if you look at 1.7%, surged, and euro itself weakened by 3%. So these are the various changing dynamics in the emerging market, advanced economies, currencies. When it comes to emerging markets, emerging currencies, the first one was advanced economies rather, now it is emerging. Indian rupee 74.41, weakened by 2%. South African rand 14.6, strengthened by 0.6%. Brazil 5.21, and again weakened by 0.25%. Russian ruble 73.14, strengthened by 2%. Chinese yuan 6.46 against the dollar, that's strengthened by 1% year to date due to dollar weakness. These are the changing dynamics in real order in terms of emerging markets. So currencies and commodities have a different dynamics in the coming days as well. Let's watch.